And that sound means we are now live here on our YouTube channel, Tackle Trading's Halftime Report. It is the first day of October to start a new month. We're going to have more corporate earnings this month, different economic data. We got more jobs reports coming out, some stuff to analyze here today. But always the first day of the month kind of gives you a fresh new start. End of the quarter from yesterday. We're going to break down the markets one step at a time. On today's show, we've got earnings, out of Bed Bath & Beyond, Conagra, Pepsi, Constellation Brands. We have more rumors out of fiscal stimulus, comments out of Mnuchin, out of the White House, and out of Speaker Pelosi, and we'll break those things down. FOMC backs off or actually extends the bank dividend payments till the end of the year, that they cannot do them. Moderna has some vaccine talks on cruise lines, and more. We'll break it down, downgrades as well at the end of the show. We've got the regular crew here today. We got Matt doing analysis and running the screen here today. We've got Mark doing analysis and giving commentary on key items, and Cody on the back end producing. I am your host, Coach Tim Justice from Tackle Trading, and welcome out hashtag Team Tackle as always in the chat. Want to get our veterans coming in here and embracing our community. And if you're new to our channel for the very first time, stick around, join us, enjoy it, have a conversation in the chat, and click that subscribe, click the bell, come back and join us each and every day. Start with you, Matt. How you doing today?
Tim, I'm doing good. Excited to be here with the team. I'm doing a little better than, say, oil and copper today, and I'm not doing as well as Bed Bath & Beyond today. I'm somewhere in that zone here. So if you're looking at this from just a price action perspective, and we're looking at copper, I'm doing better than that, okay? And I'm not doing as good as that. So I'm somewhere in the zone here.
So you're like the NASDAQ, you're pushing resistance,
I'm pushing, trying to break through some personal resistance. And if I can, I might see some momentum, but I'm increasing my probability of it. Yeah.
That personal resistance might be your 7-iron. We got to get it hitting straight there. No question.
Do you really want to talk about this?
No. Yeah.
Do we want to talk about iron game
shots
today?
Fired. Shots fired.
Listen, but why fire a shot when it's so easy to counter?
Tim, I knew you guys went golf, and I asked, how did you guys do? I didn't ask how well you did, because come on, man.
Matt beat me in an iron contest and a putting contest. They were both very close, 1 point down to the end, but he did win. We were getting ready for the tournament tomorrow. The putting contest wasn't close.
Hold on. So. Be honest here. The iron game was close. There's not a day in your life where you could beat me at a putting contest.
Oh.
Not a day in your life. You're a minus 380.
All right.
I'll take those odds. And you heard the bet line, by the way. That's right. You heard the bet line. So if we do the putting contest, I get minus 380 on the odds, Mark. He set
as long as I get even money on the iron game, I'm fine with that.
I think I can do that, and we'll do that.
You shank too much.
It's true, dude. My golf game is not on point. So.
And you see a hole, you don't even read the green. You just hit it towards the hole, and you hope it goes somewhere.
I never understood why people take so much time putting. Just hit the ding ball, see if it goes in. Try to get it close, then hit it again. And if you have to hit it 3 times, you're not a very good putter, which is where I am consistently in my life. Golf is a great game. By the way, the courses are packed. I was thinking about they were absolutely. We tried we called all the courses in Utah, and it's like 95% capacity. They've been filled all year long. I just haven't played enough golf, Matt, to know that. But the golf game in that sector has been strong. Maybe we should look at what is the biggest golf company? Callaway. I think ELY is one of them. Yeah. I bet they
listen, they're not buying new clubs. They might be using their clubs, but they're not buying new clubs.
Fair point. Let's start with the markets here on a technical perspective. I think it's been very impressive from an intraday, back and forth. You're getting the sell-offs, but then you're getting defense on the intraday. You're finding support. It's rallying back up. Now, we still have not cleared the daily resistance level, Matt, at that 3,400, and there's some just above 3,400 on the intraday. I think 3,420 as well. What's your read on the S&P 500 here to start?
Yeah, technically not a lot different. than yesterday. I think the bias has to switch to a little bit to the bull side, just given the market response from the sell-off we saw coming into the close yesterday. The futures market has responded bullish in that capacity, and you're now starting to see firm support levels start to form at that $3,300 level, which we talked about yesterday, and now you're back to threatening that breakout at 3,400. So when you're breaking this down from an intraday perspective, we talked about the double bottom at 3,300 yesterday. You saw it come down into the 200-day moving average yesterday as well. In that little bit of a sell-off we saw yesterday. But what's been happening ever since then? Once the futures market took over, you came right back up into that zone of 3,400, and now we're just hesitating there. So I think, like a lot of people, we're looking at the Walmarts of the world. We're looking at the UPSs and of the world, the FedExes of the world, and people are making trades there. And like I've said for the last couple weeks, you see a trade, take the trade. I know there's a lot of uncertainty out there, but if you see the trade, take the trade. And I do think that level of analysis does increase a little bit if 3,400 is eventually punctured in the market. Whether you not have stimulus, in my opinion, whether or not you have a stimulus still or not. So from a technical perspective, you got to like what you're seeing here with the potential breakout and threatening that 3,400 level. When you're looking at the NASDAQ, very similar analysis to what we had yesterday. That 11,500 level was very important to us. It tested above that level yesterday, couldn't hold its head above the water. But again, the futures market took over and it really kind of drove into that 11,500 level as well. And now you're threatening a breakout there as well. So it's a little concerning that we're in this moment in time where there's heavy debate on whether or not we're going to get another stimulus package. But right now the market is pricing in like it wants to buy.
Mark, the conversation around stimulus is obviously ongoing. I saw commentary out of Mark Meadows from the chief of staff out of the White House. Steve Mnuchin and Nancy Pelosi obviously did meet. They both said that they were making progress. In fact, you had some very specific quotes. We made a lot of progress over the last few days. We still don't have an agreement, but we have more work to do, and we're going to see where we end up, Mnuchin told reporters after their 90-minute call. Mark, what's your current read on the stimulus conversations? I know we've been talking about them every day, like the market's been anticipating them. What's your read here?
I still would be shocked if one happens. I just cannot. I mean, 33 days, and thank goodness the election, and maybe we have a few days of hangover from that, right? As ballots are counted that were mailed in. But, we are literally almost a month away from the election. I just can't. I mean, just the political scientist to me just cannot see a deal getting done this close to such a heated election. Mitch McConnell yesterday said that we are very, very far apart and referred to the Democrats' bill of having a poison pill in the bill. So, there are three parties here. There are the House Democrats, and then by extension, the House Senate, which is going to go along with whatever the House Democrats do. You have the White House, which Mnuchin has done a masterful job speaking for, and then you got Mitch McConnell in the Senate. And so would the Senate capitulate under strong White House pressure? Potentially. But referring to it as a poison pill, that is usually political talk for, I don't like this at all. There's no way we're going to do that. I mean, the dialogue keeps happening. I mean, I hope we know by tomorrow, right? Like, that would be really wonderful, either if it breaks down or if it's a go by tomorrow. I'm just extremely skeptical that this happens. If it does, I think the market hits all-time highs.
But I also think we should be extremely skeptical of people like McConnell saying things during negotiations when people are trying to put pressure on the other party to make decisions.
So, I mean, it's political theater, right?
I thought it was interesting last night on the political theater front, both of your points, that they did pull they were going to put the bill to a vote, right, in the House. They decided to pull that back because of the conversations. I mean, to me, out of all of the rhetoric, all of the comments, all of the quotes that they give the media and all that kind of stuff, I'm like, okay, so why would the Democrats pull the actual bill and not actually put it up for a vote yet if they were trying to force it?
Because if the Democrats put $2.2 trillion bill in front of the House, it will pass the House, but it will not pass the Senate. That would be Pelosi's political maneuvering of saying we did our best to actually do something for the American people, and the Senate would not take it up. If that 2.2 trillion bill would have went to the House, I would have been a hell of a lot more bearish on the probability of this deal actually getting done. I feel like pulling the bill from the vote yesterday was very important in terms of looking at the psychology between Mnuchin, Pelosi, and Trump and McConnell and everybody else that has their little hands in the cookie jar here. I saw that as a positive thing.
Oh, without a doubt. I mean, that is that is actually the most tangible positive thing that has occurred.
The vote would
have
been the killing it.
Yeah.
It would have killed the negotiations.
Talk is cheap, and that was an actionable thing. Yeah.
Yeah, I saw that as a positive, and then Trump and Mnuchin in response up there 1.5 to 1.6. And in that, guys, I mean, you want to talk about what McConnell calls a poison pill. The poison pill is state and local government funding. That is the poison pill.
Mhm.
There isn't a poison pill on, unemployment benefits or PPP loan extensions. They have agreement in a lot of the major issues that are surrounding this bill. So, even after McConnell said that yesterday, Trump and Mnuchin did include state and local government funding in their increase to 1.6 trillion. And I've said this for the last 2 weeks, as long as they're talking and as long as Pelosi is coming down and Trump is coming up through Mnuchin, Trump is coming up, you got to start to increase your probability of a deal actually getting done. Because McConnell's not in this deal, and I'd be surprised if Mnuchin and Trump pass on a deal. Do you really think McConnell's going to stand back on that?
Boy, it's election season.
There's no way McConnell goes against Trump in election season.
It's a hard one.
Are you kidding me?
Yeah.
The only thing McConnell cares about is getting the third justice on the court. It's the only thing he cares about.
McConnell's got nothing to lose by letting that bill pass.
He's got a lot to lose by going against Mnuchin and Trump. I can tell you that.
Yeah, exactly.
So
he's got more to lose by not passing whatever hits his floor than he does by passing it.
That's how I see it. If they're, and as long as they keep inching up and they keep inching down and removing, I think you got to increase your probability. I give it a crapshoot right now. I think it's 50-50.
So what do we know about deadlines here? Are there deadlines in play? I mean,
there's an arbitrary deadline on Friday just because the House goes to recess, but that can be extended.
Mm-hmm. And they could always call back for a vote if they got something done next week, I'm guessing.
I do think we're this week or we're not, though.
Really?
Yeah, like you got to get something done here.
Well, but they've been talking
close.
every day. Yeah, they've been talking
You're
every
too close.
day. Yeah,
see, that's the thing, guys. You're from a negotiation perspective here, and I've negotiated my fair share of contracts in my life. There's a deal to be had here. 100%. There is a deal to be had here. You are $600 billion away. When you started this negotiation process, you were close to $3 trillion away from a deal getting done, guys. Mm-hmm. You were at close to $500 to $600 billion on the Trump plan. You were close to $3.5 trillion on the Pelosi plan. Mm-hmm. Now we're between 1.6 and 2.2 trillion with only one key component stopping a deal getting done, and that's state and local government funding. Mm-hmm. In a election season where Trump is trailing in most polls, where the Republicans are getting threatened in many major Senate elections, where the Republicans look at a 50-50 probability of losing the Senate and a 60% probability of losing the presidency. Do you really think the Republicans are going to sit on their hands because of $300 billion to state and local government funding? I don't know. I think there's a deal to be had here.
I think there's we're getting closer to where I
and the market thinks that too, right? It's been rallying all week. Headlines this morning on market. Once again, I mean, I've seen this stocks higher in early action on stimulus hopes. That causation has been back this week. Stimulus, headline after headline this week. So price action followed along. I think the market's a lot more optimistic as well.
Mm-hmm. So tomorrow seems like one of those arbitrary deadlines. We'll know a lot between now and then. Obviously, we've been pushing higher throughout the week, and you have to love the market response regardless. I mean, even outside of the news of stimulus, I still kind of hold the opinion. I'm not certain the market would sell sharply, even if
I'm not certain that either. And I think that's what gives me a little confidence. And again, we got to see the breakout here, but throughout the week, all of us, Team Tackle us, we talked about it yesterday, been getting a little bit more, trigger happy, a little bit more confident in those potential breakouts. We talked about NVIDIA and Walmart and many of those stocks yesterday. They've been good performers today. So I think the confidence is growing a little bit in the market. The weekly chart is I just love to take a look at that weekly chart because it literally is one of the best charts out there in the marketplace. And so when you're looking at this, and I come back to the last 3 years, not just the pandemic, but the last 3 years, there has been so many times where the market has went up and up and up on the hope of something, right? The hope of a phase one trade deal, the hope of this, happening with China, the hope of the reduction of, tariffs out of the Trump administration, and the hope that this would be done in the next 2-3 weeks. And then when it wasn't done in those 2 to 3 weeks, the market never sold the price gains it had on the hope. We how many times did we make fun of it? Literally in this halftime show, how many times yep, market buys on the hope and sells on nothing. Literally does just no sell. So does this market, and I know, Mark, you're a little bit more concerned than I am about it, but does this market have to sell if there's no stimulus?
I mean, once again, I am the least techie of all of the coaches at Tackle Trading. Frank and Tyler are 100% pure tacticians. I don't know where you guys would self-identify. Yeah, it's 2020. We have to self-identify at how much technical analysis we are, right? But I'm also, my personality is also to fade extremes too. So yeah, I have read too many Fed reports, I guess, and saying if we don't have fiscal stimulus, we are in a grindy market economy at best, and a lot more dire things. So I can't get on board on the sentiment. I've been talking about this, what's the spark too? If you don't have stimulus, in fact, if you have a rejection of the deal, what's the enthusiasm? Yeah, I mean, the charts are getting very constructive, especially a breakout. I mean, that's a classic breakout. Matt, you pointed out correctly several times that NASDAQ weekly chart is beautiful, because it is, right? It's a really pretty chart. But what's the sentiment, the spark, the thing that gets people to smash the buy button? I mean, I guess it can be unfettered greed. I mean, that can last for a long time. We saw that in August. I just can't. I mean, I gotta, other than greed, man, I gotta have something to get me excited that I can wrap my head logically around. And maybe that's a mistake I'm making, but that's just where I'm at on it.
Well, no, I think caution's always fine there, Mark. I think there's several things that could play themselves out in that regard. It could just be sentiment
Economically,
shift. You've had mixed to positive economic reports for a bit. You have a sentiment type of shift here recently. You had huge outflows in September. In fact, we talked about the record outflow from the Bank of America weekly fund flows report. I can't wait to read that report for this week to see what kind of fund inflows there were. You have corporate earnings in 2 weeks. And I saw a survey, Mark, on CNBC that half of the respondents think the S&P is going to rise through the end of the year. Only a third think it'll be volatile and 9% thought it would go down. So it could simply be sentiment shift. And I got a question for you on that. If the market truly does believe that a stimulus will happen eventually, because I believe you're in that camp, right?
Oh, absolutely. 100%.
So does the market really care if it happens in October or December?
Well, I mean, that's the thing. I mean, that's one of the things that has kept Carnival Cruise Line. We'll talk cruise lines coming up a while. There is this 2021, 2022, and it influences my decisions on certain investments that, yes, eventually things are going to get better on the specific industry or the specific company or the market itself. So can that alone lift up if there is this fervent belief that eventually fiscal? Sure. I think that's a reasonable argument.
We don't have a deal yet. We got a deadline tomorrow. Markets are pressing higher. Obviously, you've got the obvious disclaimers. People always throw that out there. We know other things can happen. As of currently, I'm going to stay slightly bullish. I mean, that's where I'm at. And I love that tech chart. I am more than slightly bullish on tech, by the way.
I'm old enough to remember in the market the last time the entire marketplace, not just us, but the entire marketplace was so fixated on that deadline, on the extension of the unemployment benefits on July 31st, And when they didn't hit the deadline, and it's right here, when they didn't hit the deadline, right there, what happened? Nothing but up.
Yeah.
Nothing but
Yeah,
up.
but Trump did sign an executive order. There
Oh,
was talk. I mean,
come on. Get off that. Trump signed an executive order that didn't even go into play.
listen, greed can take a market up, and that this is, I mean, this is the advantage, and they sleep lots better at night. People that are pure technicians, people that just go on technicals, they have a much higher quality of life.
No,
Because they let the chart do the talking. They let price action
I
the
do
talking.
think sometimes when we're looking at a technical scenario and we're like in our minds, we're just clouded. We can't see it. I was there last week, Mark. I was there last week. I said, listen, this is very, very difficult to see from an economic fundamental and a technical perspective. But for me, it was the multiple time frames lining up. And, you know, I'm looking at that. Let's start with the longest time frame here. I'm looking at the weekly chart. Tim, just initially, guys, buy or sell?
Buy.
Okay.
It's a buy.
Mark?
It's a buy.
Okay.
From just pure price
Just
action, absolutely.
no causation, no economic analysis, no political analysis, no nothing, right? Just from a pure technical perspective. All right. A daily chart. If you go above 3,400.
That's a buy.
It's
Mark?
a buy.
Okay. Now, shorter time frame. Let's go to that 30-minute chart. If you see the continuation of the trend over the course of the last 24 hours and you break out of 33.88, what are the day traders going to do?
There's a day trade opportunity there. Yeah, to buy.
Okay. So the position to investor class, they're not worried right now. Look at that weekly chart. Guys, on that daily chart, I keep hearing about how violent the market has been and how terrible the market has been over the course of the last, you know, 4 weeks, and how, you know, September was a terrible, you know, month in the market. And I'm like, you know what? This is a violent sell-off. This is true volatility. This is a standardized bearish downtrend that was technically driven. This is now a reversal candidate with a head and shoulder potential in the short term that if it does confirm, you got to look at it as a buy. And now all the moving averages are acting as support. So we're still in the pattern, and you never want to get aggressive within potential reversal patterns, but you got to start preparing for it. You got to start looking at the potential opportunity. And it's, you know, like we talked about on, you know, Tuesday when we were breaking down Walmart. You know, and we were talking about how on Monday, how we were talking about looking at the stocks who showed strength and weakness. And we were talking about yesterday, the potential breakout of 140. And what did we say yesterday? In the face of the uncertainty, you still got to buy.
Mm-hmm.
If you see a trade, you have to take the trade. Now, don't over leverage yourself in this environment. Don't over position yourself in this environment. Don't go right in the money put options to buy out of the money call options and be aggressive. You know, be cautious, be conservative, you know, respect the variables that have the ability to drive the market one way or the other. But I just think at this point in the marketplace, if you see a trade, you got to take the trade.
Mm-hmm. Mm-hmm. You know, and some of those catalysts, Matt, you're talking about that could spark it have been around unemployment numbers, economic data, things that have been happening, obviously. And I think the data has actually been coming in at least middle to positive over the last.
I thought yesterday's
data,
yesterday's economic data, I felt was very positive. I felt like the labor numbers that came out yesterday showed the labor market improving. You also had today some economic data points today that it certainly wasn't as positive as yesterday's, I would say. Yesterday's was fairly decent. But ISM manufacturing, which is the number one manufacturing report that I personally look at on a monthly basis, that came at 55.4 versus the expectation of 56. You saw in that report that is the 5th consecutive months of economic expansion in manufacturing, which coincides with where, you know, kind of that post-pandemic craziness and whatnot. So you've seen the continuation of the expansion of the industrial manufacturing for 5 consecutive months. Two specific sectors in that manufacturing data that were very positive: food and beverage and tobacco. very positive coming out of food, beverage, and tobacco. Metals and chemicals, the second most robust in that report. And the only really kind of just bad, negative, bearish type analysis in the report was petroleum and coal, which we've known that one for years now. So, you know, outside of petroleum and coal, you know, those traditional fossil fuels that have been struggling for years now, you know, with coal, it's been struggling for how long? 12 years?
At least 12 years. Yeah.
12 years?
Yeah.
Oil, what, 5-6 years?
Mm-hmm.
Right? I mean, so those are nothing new to the market. So, you know, outside of that, I mean, manufacturing data was pretty good. Personal income data today was not good, but obviously that goes to what Mark is talking about with the importance of stimulus and this money coming into the market and everybody having a little bit of extra money. Once stimulus did go away, we did see a decline in personal income by 2.7%, which is a fairly substantial decrease in personal income over the course of a month-to-month report. If that is a year-to-year report, that's a bad number. A year-to-year report, that's a bad number. 2.7% decrease in personal income month over month is a terrible number. But again, why? Why was that number a terrible number? Stimulus. If stimulus comes back, direct payments, unemployment benefits increase, that number comes right back to the equation. Personal spending, however, did not decline like personal. That's so funny.
It's amazing.
I'm sorry.
I'm
sorry. I just need a moment.
Dude, the
That's
consumer,
just so funny to me.
do not bet against the consumer.
Do not bet against the American consumer, ladies and gentlemen. Their income, think about this for a second. Their income decreased 2.7 last month. Their spending increased by 1% last month.
Yeah.
They don't care. They're like, nope, savings, debt, I'm still spending my money, your money, and everybody's money. But the income, the only economic data point I saw today that was slightly concerning was the personal income data. And that, if we do not get stimulus, that will be one of the areas of the market from an economic perspective that I will be focusing on like a hawk, because we know how important consumers have been to this marketplace. And not just in the last 6 months, but ever since we've had no growth in S&P 500 companies. Now remind this, guys, we've had no growth in S&P 500 companies, not just the pandemic. We've had no growth in S&P 500 companies since 2018. Since 2018. So in the last couple of years, even before the pandemic came out, consumer spending was so vitally important to the market. The consumer confidence number this week came in as a positive as well, Tim. So, you know, despite them losing a little bit of money in the month, consumers are still a big player in the market. Does that personal spending without a fiscal stimulus, does that have a bigger impact in the market over the next 2 to 3 months as we go through the Santa Claus rally season? Yeah, that would impact my Santa Claus rally analysis, no doubt about that. But does it impact it today? No, not there yet. One data point isn't a trend.
Well, and we've had a couple of jobs number this week, kind of setting up the monthly unemployment report that happens tomorrow. We know about the manipulated data and the, you know, kind of the fact that the markets have not cared about it. Do you guys have anticipation for this report tomorrow on the backs of these two jobs reports we've seen this week?
I don't care about the labor market numbers on Friday.
I don't care about them either.
It's just
Listen,
not,
we know the picture, right? We
Yeah.
know the picture. It's not going to give us anything that changes anything.
Did you hear me say initial claims today?
So it just does not matter.
I didn't talk about initial claims today.
You know, I mean, if you want to talk about unemployment, I think there are a lot of interesting headlines outside of the stuff. I mean, we're getting companies just left and right laying off people, right? American Airlines plans to furlough 19,000 workers tomorrow, prepared to reverse course.
Don't you love that one, Mark?
That was an interesting note.
Don't you love that one? Hey, we are going to fire 19,000 people unless you give us some money. So it's on your head, not on
it's
American
not us,
Airlines
man. Listen,
head.
we love you people, and you know,
it's
if we get
it's
some
not
free
us
money,
running a bad business for the last 10 years. It's not us putting stock buybacks in front of actually running an efficient business. It's on you, Congress. If you don't pass a stimulus that gives us $10 billion, we're going to lay off 19,000 people. Get the hell out of here, American Airlines. You're a bad company ran by bad people.
Matt's favorite company, Goldman,
and you're a shitty airline. I always hated flying on your airlines. I always had to fly on them from like Dallas every now and then, from Chicago. And I just was like, this plane has a higher probability of going down just because it's not Delta. American, that is nonsense.
Mark, you had a thought there.
Free money or we're firing everybody.
Hey, Matt, your favorite company,
Lord.
Goldman, announced laying off 400 people, about 1% of its workforce.
Oh, let me just, light a candle in the wind for those people.
Allstate announcing 3,800 layoffs. I mean, I haven't seen trends in layoffs at companies like this since 2008, 2009. And it is I mean, we all knew that the hospitality and entertainment sectors were going to get hit hard on COVID. That was a no-brainer. We all knew that. I mean, the unemployment is spreading out into different sectors across the board. I literally have not seen strings of headlines like this in 12 years.
Mm-hmm.
And as long as money is printed and money is given, everything's fine, right?
Well, and that
I guess that's one of the reasons I have the stimulus being so important, because it's like eventually the weight of that is just really, really heavy.
Mm-hmm. Well, and that kind of goes back to Matt's point over the last 6 months that we're not in a V-shaped recovery. Part of it is because of, we just have not seen a snapback in the labor market. Markets have been shrugging that off for a while now, though, guys. In many regards, they're looking at 2021 earnings, now 2022 earnings.
No, it's all 2023 earnings.
2023 earnings now. Let me know when we get to 2024 earnings, will you guys? I'd like to start.
How many consecutive years are we going to have no earnings growth?
Well, I mean, it's the Stanley Druckenmiller argument. Is like, listen, I mean, we're heading to a maybe a lost decade. I mean, it's one of the, like, if you just keep pushing this off and you don't have stagnant, you don't have real growth, it's this. Hey, Stanley Druckenmiller, when he says we have a lost decade, some people might hear that as bearish. I'm like, that's an excellent cash flow environment.
Neutral. You just like the idea of neutral.
Like a lost decade. I mean, if the
you.
market did not, and I don't believe that. I believe markets go up. I really do. I mean, at the heart of my hearts, I do. But I'm like, if you had a lost decade, that would severely impact some people's retirement plans. Cash flow traders would do very, very well in a 10-year consolidation pattern.
Cash flow traders, like most market conditions, I believe they find a way to operate in them. Matt, outside of economic data that we've been talking about here and breaking down, there's also some interesting stuff going on in commodities that I think has to be added to the conversation in the broad markets. I'm seeing sell-offs in crude oil today, copper today, other things as well. Let's start breaking down some of these other charts if we can. And let's go to crude oil first. Matt, we were told not to test the resolve of the kingdom. Well, somebody's testing the resolve of the kingdom, at least. They are selling this off sharply here, down almost 5% today. Marky, what's going on with crude oil? Is this just technical weakness? Is this just the energy sector
and we were
weakness?
debating it. I mean, I don't think we came up with a consensus reason. So I think, if you don't have a causality reason, you got to go on the charts, let it do your talking. So breakdown of intraday support levels that were formed this week.
What do you want? I was talking about airline bailouts.
We're talking about crude volatility and the selling. Yeah.
Sorry about that, boys.
No problem. We were told not to test the resolve of the kingdom, Matt. And I said, somebody is testing it here. Obviously, we're selling off a little bit. Mark brought up the fact that you got to go on technical charts, and technical charts are leaning bearish. I mean, Matt, what's your read on crude oil?
Have Mark read it. I'm still typing.
Marky?
No, I mean, once again, as somebody that, like, I use technicals as a support tool, or I use them as hey, I don't have a freaking clue, so I'm going to go straight off technicals. And we were talking about it earlier in the show and before the show started, and we couldn't come up with a consensus. And I think in those situations, you got to read the technicals and absolutely. But I don't know if price movement. Once again, oil is starting to behave in a way that I'm used to oil behaving, right? You have these 3-day rallies, right? Now you have sell-offs. I mean, I just have this broader range on oil developing. In broad ranges, you can have some really nice short-term day trades and short-term swing trades as you play off different things. So, I mean, a ranged environment does not prevent. All it is a ranged environment means that classic momentum trades with clear trends aren't available. But day trading, really short hyper swing trading, can take advantage of ranges really, really easily. And you know, like I really think if you asked 10 banks today, why is it selling off, you'd probably get 10 different answers.
Mm-hmm. Well, we do know that even within a broad range, like you're talking about, there still are opportunities. I mean, we're talking about huge movements here. I mean, we're down almost 5% today, from 40, and it could not hold that 40 level here, Matt. Matt, you got any technical read on this crude chart?
I still feel like 36, 37 is going to be in play here.
Mm-hmm.
So you got to have a slightly bearish rating. It's volatile. It's crazy. It's a tough tradable instrument, and there's far easier tradable instruments than crude oil right now.
That's been my perspective for a bit. Kind of just been focused on charts that I feel are a little cleaner and easier to read. Another one that's not a clean short-term read has been gold here, Matt, battling back up in some of these resistances as the dollar's had a bullish retracement. Gold has had a bearish retracement. Let's take a peek at gold if we can and keep working through commodities. We got a bunch of individual companies I want to get to a little bit later as well. Gold next, if you can. Maddie's caught up in the chat, I believe.
He's talking airlines. Well, listen, he has it right to talk airlines. Airlines
Yeah.
abuse the system.
I'm trying to catch up on it. I don't know what's going on.
You know,
Yeah.
when you're poorly managed and then get government, give me the highlights. This is one of those times.
All right,
I'm like,
what do you want me to analyze? I'm done chatting for now. I'm
Gold.
back. I'm done with airlines.
That's all right.
Listen,
I'm trying to catch up
I'm
on
sorry.
it.
I will never agree with bailing out companies that made bad decisions that needed a bailout.
Yeah,
They're not. I'm sorry. Like, do we really think that the private industry is not going to acquire all the assets under American Airlines and build a better, more efficient company? I mean, is it American Airlines or nothing?
No.
If that's our choice, then yes, bail them out. But I just don't believe that's our choice. I believe we have more choices than that.
No, in capitalism, you
I
have to.
So in the heart of my soul, I so agree with you. You know, if companies if they don't spend any time thinking about a rainy day, and they try to do their financial engineering and spend billions and billions on buybacks, and then want those billions back.
Listen, we don't need to rehash the $50 billion that the airline industry spent on buybacks in the last 10 years. We don't need to rehash the $50 billion bailout that they had to get to offset the $50 billion. We don't have to rehash all the bonuses that the airlines paid themselves for all their stock prices going up because of buybacks. And we don't have to rehash how capitalism works today.
Mm-hmm.
Let's just move on.
Yeah, let's move on to gold then. I do want to rehash the gold chart because I'm really
Listen. Yes, there's painful moments in economics, guys. If you don't punish bad behavior, all you're going to do is create a spoiled child where you have to create a socialistic viewpoint of everything. I'm sorry. I'm done with the corporate bullshit socialism. I'm done with it.
Mm-hmm. Mm-hmm. I agree. And
I'm also done with us as the consumer base, us as the people supporting corporate socialism. There's got to be a better response. There's got to be a better way we approach a free market than constantly making the easy decision to bail everybody out.
Mm-hmm. Mm-hmm. So the headline where the airlines are threatening to fire people if they don't get more money is not probably in line with.
Sorry, I'm just not going to support that.
No, I'm not either. Maddie, let's take a look at gold if we can. A little bear retracement developing on this chart. Obviously, I think our community is very, focused on gold.
Bailing out companies, private equity companies, is always a bad thing. You can always in the moment say, but this is a unique condition that might create some volatility. No, it is always a bad thing to bail out private equity companies. Always. Mm-hmm. It was, and Terrence, it was bad in 2009. Did we learn nothing? Because what did they do in 2009 with all the money? Stock buyback programs and increased dividend. That's all it is. I'm sorry, that's a trigger one for me, the bailouts. that's a trigger. That's like anytime it's like talking bailouts, that's a trigger. Bailouts might be even a bigger trigger than Fed monetary action.
I'm not sure. Mark, see if you can trigger him on the Fed. You got Fed?
No, I'm done. I'm done. No, I am back. I'm drinking tea. I got watermelon tea right now. I'm good.
You made fun of Matt's golf game. I ain't joining this party.
Yeah, Tim tried to make fun of it, put me on edge. No, I'm good.
Yeah, shit. The second I heard you say his.
don't get me wrong. I love the conversation. I absolutely love the conversation. I'm just adamantly opposed to bailing out private and public companies.
Yeah. Yeah.
But Matt, the Fed is a necessary evil in order to control the monetary system.
No, the Fed is just evil.
Touche.
We're done. We're done. I'm done.
Good
That was
point.
such
Good
bait. I
effort.
thought you were
Good-
gonna catch it.
No, I'm
man.
Good
done.
effort. That's like, you know, you got your fishing line there. You're like, I'm gonna throw
Yeah,
this
I'm
out
just
here, see
done.
if I can get a nibble. I'm gonna throw this out there, see if I can get a nibble. Oh,
Let's just get back to how I'm bullish on the market right now.
no, I want to look at gold. Damn it! Bring up gold.
All right, gold. Let's take a check. Let's take a
Because
quick look at
I'm
gold.
interested, obviously, because everybody is. We all kind of, I think everybody in tackle trading probably focuses on gold, thinks about gold. We have a lot of conversations about gold, what it means long term. The little rally, you got to be optimistic if you're a gold holder like I am. But Matt, there's a million technical resistance zones between now and clarity. I mean, how do you unpack this chart besides just saying, I'll just think about it long term and not really get wrapped up in it? Because there's weakness here, you know, in the chart.
Long term, I have no problem anytime buying gold long term. Okay, that's number one. Number two, though, I feel like the movement in gold today is gonna fool some people. And it's just my opinion, but I definitely feel like it's gonna fool some people because, like I said yesterday, you cannot understand the gold chart unless you understand what is happening in the dollar right now. And so when we're looking at, let me first start by taking a look at the dollar very, very quickly. The dollar right now is really holding its support levels right there above the rising 20-day moving average. We talked over the last couple of days how it was testing the momentum of the 9 EMA. It has failed at the momentum of the 9 EMA, but the traditional retracement would be down into the 20-day moving average, somewhere around that, or right there above that previous pivot at 25.25, 25.20. So as long as the dollar stays above that 20-day moving average and above its support level that was formed from the old resistance level in the head and shoulders formation, you got to have some degree of bullish rating on the dollar right now. So when you're looking at a potential bullish retracement on the dollar and you're still looking at a bearish retracement, despite the really positive type price action we're having today in gold, I think it's going to fool a little bit of people simply because it got above 1900. Remember, that zone of resistance is not 1900, it's 1900 by 1920. And so you have that 20-day moving average right there in that zone. You're still underneath the 50-day moving average. And so in my opinion, I still believe this needs a little bit more time to shake out for gold to really get back to that. Hey, listen, it's go time, right? Now, from an investment perspective, no, you don't need pure technical analysis from an investment perspective. What you need is, from a short-term price perspective, you need a little bit more time for this to shake out. So as of right now, I still got a slightly bearish tilt on gold with a slightly bullish tilt on the dollar. Now, obviously, when we're talking about the dollar, anything can reverse based on any degree of economic report from any country from around the world, including the major ones out there. But as of right now, I still think we're a little bit premature on the gold recovery.
Mm-hmm. Yeah, I think it's premature as well. And, as we're battling back into so many of these zones, obviously there's things you can do with your long-term holdings. Like Mark, you talked about the other day where I could sell calls against them, even if they're deep out of the money in a low delta. I thought Coach Noah Davidson did a great job on our weekly webinar last night, talking about covered call writing using different deltas in a market like these volatile markets. So there's some things you can do if you've got long-term holdings here to kind of play the hesitation if you are hesitant a little bit in the short term. As I'm looking across it as well in the metals, I think we got to look at copper today. It is down 5%, selling fairly sharply. And, Mark, for a bit, you were fairly bullish on copper, thinking we're going to hit up in those 330, 340 kind of zones. Now copper, I mean, you have to say the chart's almost blown up a little bit here, at least from the one-day price action. Marky, what is your read on copper technically, fundamentally, and does it tell you something that you're thinking out there?
Well, I mean, anything I would say on copper is pure speculation on my part right now, because it's the same thing with oil. When you don't have a universally accepted causality link of what this is, and sometimes you have those, right? Like earlier this year with COVID, there was no question copper was going down, oil was going down because of COVID and the impact. So sometimes absolutely what is going on with the price chart and what is causing the thing. with oil and copper, a lot of it is the same right now. It is a big, you could speculate, you could, make a good guess on what is happening, but that's a short-term support level break. It's a short-term support level break. And, you're heading back into what, if you put it on a weekly chart, which would be a, kind of a messy range right now, So normally, economic movements in copper are indicative of worries about global economic activity. Whether that is the case today, whether it was a algo headline, that's speculation, but it is now heading back into what could be a messy range on copper.
Maddie, give me that copper chart if you can. I just want to get a technical read on it, because I do think, it is one of the metals we do track in the commodity report, obviously very important from an international perspective, and all the sensitivity to China as well. Number one user of copper in the world. That looked pretty good there developing a few weeks ago, Matt. Now we've kind of broken down on the chart. What is your read here now, just technically, Matt? And you're on mute, sir.
Thank you for that. Technically, Tim, it did set up very good, and we had a couple good trading environments there in the short term. Obviously, copper is one of those beasts that has a ton of geopolitical type, return versus risk to it. Mark, out of all the commodities you track, and you track them all, which ones do you think are the most prone to geopolitical, international type headlines, news?
Copper and oil.
Copper and oil. I would say copper and oil as well. So even more so than like gold doesn't nearly have the importance from a geopolitical perspective, but I would say copper and oil as well. And you're starting to see both of those two break down here today, and I think that is very telling from a geopolitical perspective, and it's something I want to look into. But from a pure technical perspective, you do have a little bit of a head and shoulders formation in the short term. Left shoulder right there at 307. Tried to peek its head above the water at 3.1, got beat back down at 3.12, established a lower level of resistance at 3.05, and then violated the neckline, which is right there, coincides with 295 by 3. So, and it's a massive sell on big volume here today. So unlike the recent sell-off we had in crude in late July, early August, where it held its 50-day moving average, this has some volatility and some violence behind the volatility to it. Big down day, begged, pleaded with support, right? Gets beat back down, no pleading or begging at support that time. You got a confirmation of a bearish downtrend at this point, and your probability has to be shifted to the downside.
Yeah, I would agree with that. By the way, you speak his name 3 times, he appears instantly, and I see Coach Noah Davidson.
Oh, I'm drawing a pop culture blank.
See, next time Noah's going to be like, I'm not going to brag about my webinar when I'm on the halftime report. I'm not going to do it, because in the chat I was like, okay, if you're going to brag about your webinar, you might as well come in and talk about it.
Well, dude, it was a fun webinar. I was bragging about it too, and so was some of the students. Yeah.
What is the pop culture reference if you say their name 3 times? They appear. What is that pop culture reference? I'm drawing.
Well, I mean, the actual one or like the new ones that we like to make up.
Either one.
Well, you got Bloody Mary, Bloody Mary, Bloody. Oh wait, I can't say it 3 times. Beetlejuice. Wait, you can't say it 3 times. There's a lot of them.
Beetlejuice is the only one I could think of. Yeah. I'm not good with pop culture references. I forget stuff pretty quick. Noah, great job last night, by the way.
Yeah, we had a lot of fun. It was a good conversation. We had a lot of people show up. Which was nice. It was always fun. And we got to talk about some just cool concepts, just how to manage covered calls in a market where we expect more volatility, how to open yourself up to some of the upside gains and select proper strike prices that allow for those potential gains, and then what to do if the market turns south, how you can roll your calls, and even use calls for defense. So we talked about just good conversation all the way around about the cash flow and different uses for the covered call.
Mm-hmm. And I think it's inappropriate in this time, obviously, with volatilities picking up, for cover call traders to know exactly how to handle it no matter what happens. If we do break out and run up, you got to know how to manage it, buy the option back, maybe even roll it out if you don't want to have that stock taken from you. And if we do turn back down, how to, lower the call, rights and kind of protect them, and pick up some cash flow as you're moving forward. So if you're a cover call trader or if you have interest in cash flow, I would definitely go back and, watch that recording if you've not done it. So great job last night, Noah. Let's go here, boys. Matt, last one on broad markets. Then I got individual companies if we can. The dollar, which is related to that thing that's happening in gold right now. And Matt, you nailed this last week, in our scouting report meeting and on the halftime show. You're like, guys, yes, the dollar broke out and rallied, but I expect a bullish retracement. And we did have the bullish retracement now 4 days to start the week. And I think Cody's probably going to want to pop in here and get a little bit excited because I think anybody who's a currency trader likes the way this price action is.
Exactly what we were waiting for.
Yeah.
Exactly what we're waiting for. So I'm definitely excited about it.
Matty, bull retracement, confirmation would be opportunities for some of these cross pairs. Is that how you got it?
Oh, I think that's how you have to have it is, when we were sitting in the scanner report meeting last Friday, and we were talking about where we were going to rank the dollar, there was a lot of, hey, listen, we got to respect that breakout. We got to respect the breakout. And I certainly respect the breakout there, but I just kind of felt like we were already had made that run. We were already overextended. I expected some downward movement in price. I thought gold was overextended to the downside. Dollar was overextended to the upside. And I thought there was going to be a little bit of a reversion to the mean. And that's what we got. We got a reversion to the mean. Gold back up to 1900, the dollar back down to a support level. So at this point, it's kind of one of those make or break type moments. Whereas if this trend is going to develop, we're going to see support form here. We're going to see an upward movement in price, and then you can get a little bit more confident in a trend. We talk about confirmation quite a bit, from an individual candle perspective on a breakout. For example, Walmart here. I think we can all call that confirmation on Walmart, right?
Yep.
Okay, individual candle, upward movement of price, closes it above 140, that's confirmation. But you also have confirmation on longer time frames as well when you're talking about the dollar or whether you're talking about a trend. When you have this type of reversal, bullish reversal, head and shoulders formation, it breaks out of that reversal candidate, sets a higher high. Well, this is the first retest of that support level. And so to confirm this trend being bullish, you have to establish that level as a higher low. You cannot have a trend that just pokes its head above water, i.e. resistance, and then come right back down and call that a trend. You have to have two components to a trend. One is the higher high, the second one is the higher low. And so for that reversal to actually become a trend, we got to see that support level hold. And if that support level holds, I promise you, it's not just Cody and myself looking at that possible bullish retracement. All the hedge funds are looking at it. The institutions are looking at it. All the Forex traders, around the world are looking at it because Forex is one of the most popular trading vehicles, not in the US, which we should have a conversation on that at some point. Why is Forex such an important tradable instrument to people around the world, but not necessarily within the United States? Whenever I traveled around internationally, it was always currency. It really wasn't commodity equity, it was currency. And yes, I do have my philosophies on why that's the case, but we should do a podcast.
I'm curious, man. I don't know if I've ever heard your take on why that's the case. I'm curious.
It has everything to do with the dollar. Everything to do with the dollar
and how we utilize
the US dollar. And whereas other countries have to deal with currency on a daily basis, from exchange rates to devaluation to inflation, it's in their normal everyday life a tremendously more than is us. When I travel to Texas, I don't have to buy the Texas, it would be called the Texas dollar, right?
Oh, what would we call that?
Was
What would
there
you
a
call
Texas currency before?
We got it, yeah. The Texas.
I think they actually
let's call it
there was.
It was the Texas dollar.
peso.
It
We're
was
going to
the
go with the Texas
dollar. It
peso.
could be a peso
We're
too.
just going with the Texas peso. Just stop it. Okay, so I don't have to trade my Utah dollar for the Texas peso. I don't have to do that. So I don't have to really involve myself in the day-to-day operation of currency the same way other countries and other people of other countries have to do. And so because currency plays such an important role to other countries because of our reserve status of the US, we just don't deal with it on a daily basis, so that we don't. I like the Texas spur. I actually like that one, Adam. That's a good one. So it's just the importance it plays in our everyday life, and and obviously that conversation goes a little bit deeper, but that's really the thesis behind it, is just the importance the currency plays to other people in other country versus what it plays to us within the United States. But when you're looking at this from a trend perspective, currency, especially in a world where you have all these 8 major banks out there all fighting for the same thing, which is zero interest rate policies and who can be the biggest of. What it creates a lot of times is just net neutrality in currency. That's what it creates. But there are moments in time where you have these strong trends develop. And these trends develop are those number one times where active currencies really like to push that in and get aggressive with their currency trading. And so this is one of those moments in time. Now, where would that confirmation be? The currency, looking at an index, obviously is different from looking at it from an individual perspective. But I'm looking right here at that previous high from yesterday, 25.45. If you can get back up above 25.45, the most likely scenario, obviously on UUP, is looking at the euro US dollar here, is you would have confirmation underneath this 9 EMA right there at about 117.10. So, you're always looking to trade currency on the actual currency pairs, unless you're doing the ETF versions, which is fine as well. FXE is fine to trade on the euro. But Cody, could I sign you up for a short underneath 117 on the euro? I'll wait.
Yeah,
but
no,
he's gonna say yes.
the euro dollar was, in my opinion, one of the better
Yeah.
charts out of all the cross pairs. I like this dollar Swiss franc too, Matt. I even went and looked at all the Forex pairs here while you were talking, because this is a clean pattern. So there's several of them developing. The euro dollar is a great one, and its pip spreads are always liquid. Those who do trade Forex, obviously, that is the most.
You got to trade the majors. There's no doubt. You got to trade the majors, or cross pairs that involve majors. But in terms of this, yeah, if the dollar goes up above 25.45, what's the euro going to do? It's most likely confirming underneath 117. So, yeah, because I'm a little bit more bullish on the dollar today than I was, say, I think we're premature on trading it yet. I'm really looking at that 117, 117.10 level on the euro dollar. But I think if it does, confirm, you got to be looking at this as a currency trader.
Yeah.
And if that's the case, you also can't be faked out by the price movement on gold today.
That's
what I like, Tim?
You
I
like
like
it when we do Forex analysis.
I like it these extended contexts. I was able to clean my
Why do you
house,
think he
water
asked
my
the
yard.
question?
I was able to fix
If you
dinner.
don't
I was able to
think
get a drink.
I caught his nonsense. He didn't care why why.
That's
he
actually
knew
not true.
full
I was
well.
actually curious because I'd never heard you say your take. I was actually curious about that.
I still don't believe you.
The skepticism is high right now.
Still don't believe you.
I'll tell you a chart we got to take a peek at is Bitcoin here. And really just because the selling in the last 2 hours is grabbing my attention. Obviously, I am a cryptocurrency nerd. I focus on those charts. I trade those charts. And we hesitated at resistance. It was threatening a breakout, Matt, and it couldn't break out. This is why Coach Frank always says, resistance, if it does break, it's important, but resistance.
And a breakout till it breaks something.
And it didn't do it yet. We hesitated there. We're down just a little bit here. Neutral right now, Matt, or is that slightly bearish?
I love our team so much, Adam. Mark had enough time to go get a McRib.
Dude, there are no McRibs anywhere in the country. If you don't think I know when there's a McRib anywhere,
listen. Mark what Mark's doing when he's like, hey, Matt, can you tell us about that one time when inflation was stagnant from 1879 to 1905? Can you tell us about that one time again? What were the economic and political and fundamental and behavioral and monetary concerns at the time? Mark's gone eating 14 McRibs.
What's funny?
The next time McRibs come back, I am putting some in the freezer.
Mark,
and what I would say to the team on Forex, guys, is you should learn Forex, not necessarily if you want to trade Forex, but I will tell you right now, guys, Forex analysis has so much influence on my other analysis in the broad markets, because currency plays a major role in all of the markets. And, you know, there's intraday time frames, but there's also intermarkets as well. And so in terms of this, even if you don't actively trade Forex, you should be familiar with Forex because it plays a major role in other financial instruments.
100%.
Yep, 100%.
We can't just think that the dollar is always the dollar is the dollar. We need to understand inflation, devaluation. We need to understand all these things.
Yep.
100% agree with you, Matt.
If you want to understand where McRibs are, by the way, they've got a thing called McRib Locator. Mark,
Well,
you
you
can
don't
get them
think
in
I
Spain.
check that once a week?
Oh my
you know?
goodness, is that a real thing?
It is a real
Oh,
thing.
that's absolute real.
There was a McRib
Oh.
sighting. You can report McRib sightings if you see them. You can get one in Spain right now, Mark.
Listen, I've had the McRib one time. We videoed it and put it on Facebook, Tim. It was the most disgusting thing I've ever tasted in my life.
I'm
And
not
I've ate some food in China that I think was still alive.
Mm-hmm. Mm-hmm. Maybe it's an acquired taste. You know, you got to get used to it.
I was Indiana Jones in the temple eating some food that was still alive, and I would still rather do that than even smell a McRib.
Dude, I could rewatch Indiana Jones. You know, I don't think my kids have ever gotten into it. I could get down with that. You just gave me an idea for the weekend. Maybe we'll do a family night where I'm watching Indiana Jones. Got to start with the beginning, but you're right. Let's talk individual companies, guys. We still got several I want to get to,
Yep.
Matt. We did have some corporate earnings today out of some bigger
We
names,
did.
you know, and we're going to start having this conversation more through the month.
We are.
You know, and whatnot. Bed Bath and Beyond, Conagra, Pepsi, Constellation Brands, a lot of consumer product companies. Let's start with Pepsi
Consumer
here.
week.
Yep.
It's definitely consumer week, and we're going to start with Pepsi here. And the only reason I just think Pepsi is one of those bigger names more than anything else today. But overall earnings, and I'll go through the numbers, guys. But you know, earnings, and again, this goes without saying, expectations are depressed. Yes, Terrence, let's absolutely do that. I need to know if I'm wrong or Mark's right here. Yes or no to the McRib? Okay, yes or no? Just yes if you love the McRib, no if you don't love the McRib. I need a straw poll here. I think I might lose this one, Tim. I think I might lose this one.
I don't know. I mean, here's the thing. If the
I
McRib,
bet you actually win it, because I think people
it's
that
a niche.
yeah, it's a niche. I think those people that are yes are strong yeses.
Yep.
So they're like the Tesla crowd.
Oh, no, absolutely, 100%. Oh, it is a cult thing.
Okay.
100% a cult.
Since now it's like the Tesla crowd, guys. I love McRibs. I do not want the McRib crew coming at me. No, I'm kidding. That McRib, terrible. It's terrible. I don't know why anybody would have one of those. But we all have our intricacies, right?
Mm-hmm.
We do.
What was I talking about?
We do.
Pepsi. Overall, guys, earnings, it goes without saying, earnings expectations are depressed. So we're beating very low bars here. However, the market typically doesn't care about that. Just people that are in the know make fun of it. So let's not put too much market emphasis on that. But earnings overall were fairly positive here today. Pepsi came in at $1.66 a share versus the expectation of $1.48. Revenue came in, beat revenue at $18.1 billion versus the expectation of $17.3 billion. Revenue increased 5.3% year over year, which is nothing to be too, maybe a golf clap. Good job, right?
Mhm.
Nothing to get too caught up in. Plus, Pepsi's not exactly like a growth stock. And they did have a slight increase in guidance from the year over year $5.30 excuse me $5.33 to the $5.50. I think if you're an investor in Pepsi, you got to be happy with the results. Technically, nobody swing trades Pepsi.
No, it's a dividend play, and it's a consistent company. And the fact that they did forecast full year profit guidance, Matt, obviously the market does like that. That's the trick, companies. I don't know if anybody is not aware of it now. If you either affirm guidance or just don't give it, you're probably going to be rewarded by the market. If you come out and you pull guidance or give negative guidance, markets have been beating up those companies. So Pepsi, yeah, if you were an investor in Pepsi, I don't think you're changing anything after today's earnings report.
Do you think
probably
guidance will be done away with?
What
I've
would
heard a
I
few
personally
CEOs.
support? The removal of guidance or the elimination of two earnings reports on a yearly basis. So
I would love that.
go back go back to reporting every 6 months, so every other
Biannual.
quarter.
Yep.
Okay, and the removal of guidance. Man, you remove guidance, there's a lot of fundamental analysis that the market's going to have to reassess, and I would 100% support it because I believe forward guidance is never right, ever, ever.
Feels like a dog and
Ever.
pony show most of the time
Ever.
anyways.
They literally only put forward guidance with the most beautiful expectations out there, and they remove it due to uncertainty. Uncertainty always exists. I would absolutely support two yearly reports, one in the first quarter, one in the third quarter, and the removal of guidance. Get back to traditional fundamentals instead of this, oh, we think we're going to be this good in the future when you're never that good in the future.
I would support both, but I would love to have 2 quarterly earnings.
Could you imagine, guys, not having to worry to navigate earnings as a short-term trader
every 3
twice a
months?
year?
Yeah,
It'd be amazing.
Yeah.
All of a sudden, now you have what? 2 additional months in the year where you just get to do your technicals trading. I would love it.
It would make earnings plays a little more interesting too. They're already interesting, but can you imagine 6 months of we're waiting for
I'm
results?
kind of done with earnings plays. I'm too old now. I kind of feel like I'm Danny Glover in Lethal Weapon when it comes to that.
See, I've started to love
old for
earnings
this.
plays. I seriously, Matt, one day, how old are you now, Matt?
I am 42 years old.
You're 42. So, in 7 years, you're going to go through this revival where you'll lose 25 years and you'll start trading Kodak.
Not going to happen, Mark. Not going to happen.
We'll see. We'll see. It's easy to say that now. Wait till you get to.
Not going to happen.
We'll see. We'll see.
Tim, that's not going to happen.
Probably not, but listen.
You know that.
I mean, it's like one
Tim,
of those
once
things.
I have a stance, what does it take to get me off my stance once I'm on?
Mark is younger than I've ever known him, so let's just call it like it is.
But that has nothing to do with trading Kodak. Kodak is a byproduct of him trying to be younger.
It takes a lot of information, data, and for you to work through conclusions before you're going to change a position. So it does take you time, but when you decide to change your position, you will change it quickly. Once you.
If the evidence is there, I'll change it. Yeah,
absolutely. Yeah, absolutely.
But I'm a data-driven analyst.
And I think we should all aspire to be more data-driven in this world and keep the emotions out. I agree with that 100%. Let's keep talking.
Very quickly, James, Facebook breakout, reclaiming the moving average. Not my cup of tea. Again, I'm looking at buying things that held its support, didn't trade with the market. But if the market does confirm, I got XLC as a potential runner here. And if XLC does run, I was going to look at a couple sectors later on today, but XLC, and I just want to quickly do this because I didn't want to lose it in the chat there. And I did appreciate me and James' conversation earlier, so I'll break it down. XLC, Facebook look very, very similar to one another. XLC was the one sector today that I thought was confirming from a technical perspective. So not just James, but Team Tackle, keep an eye on the communication sector here today. It's that first day after 3 days of consolidation, starting to drive up out of that resistance level of $60. I think we should keep an eye on communication. Communication, and Facebook's not my cup of tea because I hate Facebook. And that's more just me as I hate Facebook, not from a stock position. But in terms of this, communication looks really good. Communication runs, Facebook runs too.
Yeah, I like communications. I like tech. I understand.
I think I like communications more than tech right now.
Man, I don't know. That QQQ chart, the NASDAQ 100 just at broad is looking pretty
I
strong
get
too.
it. The NASDAQ looks a little better, but I actually like the technicals on XLC a little bit more. We're splitting hairs.
Splitting hairs on that one.
We're splitting hairs, yeah.
Yep. A couple more earnings reports, Matt. Bed Bath & Beyond, Conagra, Constellation, any of them you want to go to?
Do I save the best for last, or do I just make jokes
about,
lead.
Dude, don't bury the lead.
How we're all drinking more liquor and Constellation made more revenue?
Constellation did. Give me Bed Bath & Beyond. Come on. Give me that beautiful
the best of the
out.
day.
Give me that beautiful run.
Best of the day.
Absolutely.
Oh, who said Bed Bath? Mark, was that you who said Bed Bath & Beyond's going bankrupt?
Yep.
I don't. Not this quarter.
Not this quarter.
Not this quarter. This quarter, they destroyed EPS expectations. Now, A lot of this is based on them cutting cost and not increasing revenue. Okay, so that does throw a little bit of shade on the analysis, but I'll get into that here in a second. They were expected at a negative 17 cents a share. They came in at a positive 50 cents a share, guys. That is a beautiful beat on EPS numbers. That's number one. Number two, revenue did beat at 2.7 billion versus the 2.6 billion in expectation. And we've seen this before in a few other stocks recently where a massive beat on EPS came in line with revenue. Again, these are more cost-cutting measures than they are enhancing their business, but you can't discount the EPS because the EPS is a robust, really, really, really good number out there. Revenue did decline year over year at 1.2%. So overall, the market response today on Bed Bath & Beyond is the EPS number. That's what everybody's focused on. A little bit of cold water. Revenue declined year over year. Revenue came in line. Again, this is more of a cost-cutting measure. The question fundamentally is, can they continue to do robust business or somewhere near that with the continuation of cost-cutting measures? That's an open question. For me, Bed Bath & Beyond, not a stock I trade, not a stock I invest in. But your interest has to be piqued, especially if you can show some degree of resiliency up around that 19 to 20 level. I think you gotta look at a little bit a gap, the cash open gap. All of it's pretty strong.
Dude, it's really strong. And tell me if you've heard this before: an 80% surge in online business by one of these retailers.
No, I mean, listen, I mean, the revenue was down,
part
but
of
it wasn't down that much. I hate this company. I do. I absolutely hate it. But listen, hater
Is
can't
there a
hate.
story there? Is that like somebody drug you to a Bed Bath & Beyond too many
I
times?
just have zero
spend-
fundamental conviction. I really do.
All right.
I don't think they're sustainable business model, but that's a whole different conversation. Let's complain about them at a later date because their revenue is down, but it wasn't down that much. And when you compare it to other retail store revenue numbers that we've seen in the last 3 months, it's very, very impressive how little their revenue was down in comparison. Nobody expected them to turn a profit this quarter. They did. This has a very Darden restaurant feel. I think you will see analysts do that big, huge wave of upgrades in the coming weeks. I think when we're analyzing when we're doing upgrade downgrades next week, Oppenheimer upgrades Bed Bath & Beyond to $27. I think that string of upgrades is coming. I think it's a positive momentum stock. It's just finding a setup in the coming 3 months. So it's set up well for this quarter's price action.
Mm-hmm. Yeah, surprise numbers there, and the market did reward them, gapping out. Maddie, let's break down Constellation next, or Conagra, either one. Got two more.
Let's go with Constellation next, STZ, very quickly here. Constellation Brands, liquor company out there. EPS number came in pretty healthy at a 2.76 versus the 2.51. Revenue came in at 2.5 billion versus the expectation of 2.2 billion. Just lukewarm, just very lukewarm. Nothing bold, nothing bear there. Revenue did decrease 4.4% year over year. I don't see a trade here. It's a stay away.
Yeah, it's kind of stuck in the middle between those two pivots and a non-muted response after
Consumer
earnings.
good companies can be really tough to swing trade, just as a general rule.
Mm-hmm.
That Pepsi chart,
oh, it's a position investor area of the market.
Buy supports. Yeah. It's a tough. They're just consumer good companies just tend to be very tough swing trading instruments.
They still pay you about 2% on a cover call. Options are a little bit tough right now, but
again, you're talking two different things. One swing trading, one cash flow
trading. Yeah.
Last one. Systems aren't swing trades.
Conagra last.
Let's go with Conagra, CAG, very quickly. Conagra Foods comes in at 70 cents a share versus the expectation of 57. Revenue came in at 2.7 versus 2.6. Revenue came in up 12.1% year over year, and they reaffirmed their guidance. So not an upgrade, downgrade, just reaffirm. Overall, the only one that really stands out to me is the Bed Bath & Beyond one. With the Pepsi, Conagra, and the Constellation, I think that's more just honestly par for the course. I don't think you should take a massive read one way or the other on them. The the Bed Bath & Beyond, the EPS beat is a legit number, and it's something we should look into.
Yeah, that chart looks just stuck in the mud as well. So even from a price perspective, I don't see much there. Good deal. Earnings roundup. And, I kind of like our earnings roundup. I'm looking forward to see what corporate earnings are going to be here as we move through the month of October. And Mark, I know that's still a couple weeks out till we get hot and heavy and busy, but always can be a catalyst, no question about it. Some more company news, Matt, that I thought was interesting. Let's start with Starbucks. Actually, Starbucks had, I think, a good note here today. The board of directors of Starbucks, the coffee chain, approved a 10% increase to its quarterly cash dividend because of confidence in what they're doing right now. Marky, when a company comes out and raises their dividend a little bit, does that give you a little bit more confidence in Starbucks?
I mean, we've seen the cumulative effect of that recently, right? ConocoPhillips buyback, Lulu reinstituting their buybacks, companies reinstituting their dividends, slight increases. I think it does cumulatively point to a corporate environment that is increasingly confident as a whole. So I don't, any one little bitty thing, right? But like the cumulative effect of buyback and dividend programs, it is very constructive from a broad trying to gauge corporate sentiment, and they're definitely feeling a little bit more froggy than they were 3-4 months ago.
I don't see much in the chart there that would grab my interest, Matt. I don't really trade Starbucks much, so it's kind of even a triple top developing in here. Yeah. Google.
I mean, for the investors, increasing dividend, yeah, it's got to give you more confidence in your investment position. Write some covered calls, capture the dividend, be happy. It's just not a swing trader stock.
Google went in line with so many of the tech firms recently, announcing that they want to have their Pixel 5 at $700, their Pixel 4a at $500, trying to offer kind of a discount against those iPhone buyers. Google, part of that communications sector, obviously, and they had a nice bounce off the 200. And then I saw a couple of notes let's take a look at that Google here.
Bearish retracement right now. Don't overanalyze it.
And then 2 notes on upgrades here. Amazon, Matt, got a price upgrade, and a pretty healthy price
agree or
upgrade.
Disagree? Should we play the agree or disagree on the price upgrade?
I got a couple of them here. So Amazon.
Noah. Yep, there you go.
There he is. Say his name 3 times. You got to say it 3 times. That's
there
right.
It is 3 times.
What did I miss? What am I? What is going on?
No, we're playing price upgrade game.
Okay.
So who was the man? Needham is the one who did the DraftKings. I didn't get the institution who did the price upgrade on Amazon. This is not a fundamental upgrade. This is a price upgrade, short term. They upgraded it from, what was it, Tim?
$39.25
to 45.
4,500.
Yeah, 4,500. $4,500 price target. Amazon. I'll give you mid-December.
Ooh.
Mid-December?
Santa Claus rally time. I want to see how bullish you two are on Santa Claus.
I disagree.
4,100?
You don't want to do it.
Listen, that's 35% between now and December.
You were prepared.
Well, hold on. Let me draw my Fibonacci extension.
Oh, please.
Good luck with that one in a reversal pattern.
I mean, will Amazon eventually hit 4,100? Yes, it will eventually. I don't know what year that happens in. So
it's pretty aggressive, guys. I mean, we're talking. I mean, obviously, if you're bullish on Amazon, I get it. Have a high price target, $39.25, raising it to 4,500. That is extremely aggressive here. You've got some resistance in play from the old pivot breakouts, Noah. Right there. It's coming back up into the moving averages, like much of the market. This feels like a market perform right now to me, Mark. It doesn't really look that different than a lot of the charts we saw that dipped below moving averages, came back. Now we're testing above the 20 and the 9. So you got to be happy if you're an Amazon owner of the recent price action, but I would disagree with this one for sure.
Yeah, but do you believe eventually it hits 4,100 one day?
4,500. Yeah, and eventually.
Yeah, eventually, yes.
I mean, that's the thing about these price targets. Like I wish they were more. I have this price target by this general time period. They don't have to give me an exact date, but like. Yeah, Amazon's a great company, never going away. They got this huge thing. Yeah, eventually it's going to be lots of high prices, but what's the return by the time it gets to its price target? I mean, sometimes I think this is a shell game they play with these price
Sure.
targets.
Yep. Couple of notes, by the way, in the gambling space that we've been tracking so closely for so long. And DraftKings was the first one. Donkey Kong, as we affectionately have been calling it here recently, and I think I got to give credit to Swin on that one. He's been calling that for a while. DKNG, the stock is up here today after Needham initiated coverage with another buy rating, another firm coming in here on this space here, Mark. This is a hot space in the market, no question about it. Do you agree with the buy on DKNG?
Listen, I mean, everybody loves the space. It just becomes, what is your entry, right? I mean, these are hot stocks right now. I mean, and they're getting those relentless upgrades, just relentless upgrades. It's a hot space. I mean, we've been above the 9 for 16, 17 trading sessions now. And it just, start of football season, analysts coming in, pounding it hard. It's just, it just, from a momentum standpoint, it's been there for a few weeks, right? From a fundamental standpoint, I mean, it's, really, really high valuations. I mean, but sometimes you have to pay a premium for that long-term vision when everybody else is on board too. I mean, this isn't like this niche. Oh, everybody else has started to flood the gates on this one in the last 6 weeks. This reminds me a little bit of like Peloton, right? Where Peloton started getting momentum, and now Peloton's like at $104. I mean, who knows what the limit is on DraftKings? It's really hard to predict when something gets momentum, what happens next, but everybody loves the space right now. It's really, really hot. We're really
seeing
high
it
sentiment.
more and more and more. I mean, they're piling in with a little
They're
bit.
just piling in.
Yeah, they have been. They caught a nice little upgrade. And then within the same space, let's stay right there. Penn National Gaming, PENN, which, by the way, is one of the nicer charts I'm seeing right now from a potential breakout and momentum perspective. Sentiment around this space has been very, very strong. We broke this chart down a few days ago as well. Union Gaming raised their price target on Penn National to $100 from 62. So they're playing a little bit of catch up here. They had a price target underneath, and just the momentum. Obviously, they got to play catch up. Let's start with Noah. Do you agree? $100 price target on Penn. I mean, we're in a tremendous uptrend. We've come up a long ways just in the last couple months alone. Noah, first you.
$100 price target by when?
Well, why don't I give you 3 months?
3 months. I'll take it.
End of the year.
I'll take it.
Yeah, Marky.
Yep.
I don't, when you get a combination of technical momentum and high sentiment, I mean, this is, I guess, my whole argument against the broad market, right? Is like, where's the sentiment? Man, that is not the case in this space. When you get high sentiment and technical momentum, that stuff can just be powerful. I don't know how you fight any reasonable price target in this space because it wants it.
Mm-hmm. Yep, it does want it. I want it if it breaks out for a little trade. I don't know if I would target 100.
No, just from a pure, taking a pause, setting up. It's very, very beautiful chart developing there.
I like the development of it as well. All right, guys, those are the notes I had here today. Mark, you had anything that I missed?
Just a couple other things. Playboy is going to go public again in the latest SPAC deal. Going to be traded under ticker symbol on the NASDAQ, PLBY.
They used to be a publicly traded company, right?
Yeah, way back. I don't know how long ago, but it used to be. But
SPAC deals. I mean, these SPAC deals, it's like every week, guys, we're seeing more companies get back in the market, get right into the market and get listing from SPACs. So that's a storyline here in 2020, obviously, that we will remember for a long time. Probably not going to go away either in 2021 or moving forward. Any other notes there, Marky?
Just one other. I mean, I could rattle off all kinds of tidbits, but one other thing. Carnival notifying guests that it's canceling cruises from U.S. ports, except Miami and except Miami and another one for November, December. So canceling a number of cruises for the rest of the year. They say their bookings in 2021 are strong. It's all about the future, right? And that coincides with Bank of America putting Royal Caribbean, which has had a little bit more price appreciation or less price depreciation this year than the other major airlines, putting it on its highest conviction calls for downside plays on the negative side. So some
Uh,
negative news out of the cruise lines today.
Is it
I
just,
still have very
is it
little
just me?
interest.
I have zero interest, like on the bull or the bear side of the equation here.
I'm there. That's where I am
Like, I
firmly.
have no interest at all.
Yeah.
I mean, I've had a rotating naked put at $10 on Carnival for 6 months. So
Oh, and it's been good for you. I just like, I have a hard time mapping out something on the cruises.
hmm
I mean,
I
it's
can't
hard
wrap
because
my
it's,
head around it.
I mean, whether it's movie theaters or cruise lines or airlines or pick your lines, um, it's a bet on COVID, and there's a lot of uncertainty there. A bet on a return to normalcy, a bet that companies can survive, basically survive. I mean, it's a spec bet. I mean, it is a spec bet, and a bet on a return to normalcy is just. So I like a little bit of action in there. I don't go crazy. I'd much
Got a
rather
little
put
selling in the intraday here, guys. Keep an eye on intraday support.
Yeah. Yeah. Back on that one last thought on the cruise lines, though, I will
Yeah.
say, I mean, for me personally, Matt, why would I be interested in like trading a cruise line? It's just the way I personally think and the way my brain works in trade when I've got setups like on CRM, that are about to break out, or that Penn National Gaming, you can't trade everything. And so for me, just with the fundamental backdrop and all the news around those sectors, I'm just like, I'll stay away from them myself. That's kind of where my head's at. Let's get final thoughts here, boys. Good show as always. Had a good week of shows. A lot of high energy, a lot of good conversation here today. Maddie, any thoughts for the team?
Oh, I'm looking at news.
Yeah, I'm looking at news too.
Is there something that just happened here?
I don't know.
Well, I mean, you do. I mean, sharp reversals.
Sharp reversal.
I mean, on the 5-minute chart, like if you pull up
Yeah,
a
I just said
5-minute
it was
chart,
just in the
and it
last
breaks
2-3
support.
minutes. You've had some pretty quick sell off here, guys. So
Yeah, that is usually a headline driven. Now maybe it's like nothing headline, right? And then it quickly. I mean, but trying to find the headline that's causing that.
see, this is the one thing about the halftime report. When these moments happen, like I'm not prepared for them.
You know,
So I'm in.
and usually it takes a minute or two for the. Like I don't know how you guys.
It literally could be
I'm not
nothing.
seeing anything breaking. No, I mean, unless something is not being reported across like 6 sites I just looked at. I'm not seeing anything currently, but that is notable. There's no question. A little 10 point, 15 point sell off here in the last.
Oh,
few
no,
minutes.
it's accelerating
up,
too.
though.
And volume is there.
That's headline. I don't know what the headline is. That's.
Oh my goodness! I just saw a headline that we're spending $10.8 billion on this election this year.
Oh, nobody cares about that.
Lord Almighty, such wasted money.
Yeah.
So yeah, we got to pay for this. Oh, man.
I don't see a headline that's grabbing me, guys. So obviously if something hits, we'll let you know, and we'll obviously break it down
no,
tomorrow.
this
We're down 16 points in 5 minutes, and it's
Yeah,
picking
no,
up
it's
volatility or
headline. This is
something.
algo driven headline.
Yeah.
Okay.
Oh, we can just all sit in here and
I'm
in
looking.
silence.
Look, dude, see, this is the thing about charts, and this is like, and I'm sure a lot of people out there will think, like, I like watching charts is addictive.
Well, that's what I'm looking at. Did we get some fiscal news? I mean, it's the only thing that's really kind of market focused today. But I'm not seeing
But
anything so far.
watching charts is addictive. Like, I mean, just I love charts.
Dude, maybe it's just from now on, 2 p.m. It's just bearish. Maybe
Well,
that's
2
what we're
p.m.
doing.
bearish sell
2 p.m.
off.
bearish.
I mean, that is usually when the
2
Fed
p.m.
releases.
bear sell off. Let's see if we can find some correlation here.
Yeah. Yesterday it happened more like at 3.
You look at some data. You look at enough data, and you can always find the 2 p.m. correlation. I'm kidding
right?
on that one.
Is that right?
I'm totally making that one up.
We'll figure it out, boys.
Yeah, we'll figure it out.
We'll break it down tomorrow if there's something significantly happening. Obviously, we're still waiting on stimulus conversations, see if there's clarity there. And these technicals, technicals are so important right now. We haven't broken out yet.
Just reminds me of yesterday.
Yeah.
That's what the intraday reminds me of. Just the yesterday sell off we had coming in as we test that 3,400 zone. Could be nothing burger.
Yep. Yep. All right, guys, that is our show for today. As always, thank you for attending. Thank you for being a part of our community. We really do appreciate the engagement, the conversation, and just having some fun with you guys here on a daily basis. If you are a veteran, come back every day. We'll be back tomorrow with Coach Frank.
Did you guys cover vaccine news real quick?
Was there vaccine news? Oh, the
I swear to
Regeneron one.
God,
No.
you don't listen to anybody.
Go ahead.
Moderna won't be ready for vaccine until spring.
Yeah. And that's kind of what you've been talking about for a while, Matt. All these hopes that things are going to get out there in the marketplace by October and November. They've kind of been
Not gonna
pie in the
happen.
sky. Yeah, it's not going to happen.
Pie in the sky analysis. It's not gonna happen.
All righty, boys. We are done for today. We'll be back tomorrow. Smash that subscribe, click the bell, come back and join us. Have a wonderful trading day, everybody. We'll see everybody on tomorrow's show.